Hello everyone. Today we have Varun from Tijori. So Tijori is one such a platform where you can, easily analyze stocks. You can read about companies, the financials. Also, there are multiple features like, how you can figure out the DCF valuation of multiple companies. You can figure out, you can run your own screens and see what kind of stocks are fitting into your parameters and everything. It's a platform that people have been exploring lately, and people are trying to get their hands on. And this is slowly becoming a part of their, daily analytical workflow in terms of identifying stocks based on fundamentals. So to explain you further, we have Varun with us from Tijori, who will walk us through the entire platform. And by the end of the video, you'll also get a way how to identify certain multi-bagger stocks or certain potential multi-bagger stocks, if I have to put it the right way, through screens that will be running on Tijori itself. So with this, I welcome you, Varun. I think the audience is looking forward to understanding how exactly to use this platform and how exactly to run screens on this platform and identify stocks.
Okay. So basically what we do on Tijori is, you would have heard of many, research platforms. Where we try to differentiate on Tijori is we focus on unstructured data as opposed to structured data. So what that means is you go to any website, you get the P&L statement, the cash flow, the balance sheet and stuff like that. We also have that. But what we really, try to differentiate on is the data that's hidden in con calls, in investor presentations, and annual reports. So the business data that companies talk about, which is in random PDFs or sector reports and stuff like that, we try to aggregate them all in one place on our website. So that's where we differentiate, which is focusing on unstructured data versus the regular structured rows and column table type information. So yeah, I forgot to check. You can see my screen, right, on Zomato?
Yes.
Okay, so let me give you an example of what that means. Now, when you're doing research on a company, what everyone tends to focus on is, like, say, of course, price chart information and profit loss and balance sheet and cash flow statement and stuff. Of course, we have all that on Tijori. But where we try to differentiate is, now, if I see Zomato, this is our company page of Zomato, which is on Tijori. First thing we tell you is what is the market share of Zomato. Okay, so Zomato has 56% market share in food delivery. You can just click on this and compare it to, so obviously you'll be like, how much does it have compared to Swiggy? You can just on a click of a button compare this to Swiggy. So Swiggy has about 43%, 42%, and Zomato has 56%. So this straight away gives you an idea on the business of a company rather than just some boring financials. Okay. Then if we go further down the company page on Zomato, again, when you want to understand the business better, you'll see that only 40% of Zomato's revenue is actually coming from delivery. I mean, at least me, I would have thought that, okay, must be 60% or 70% and rest from Blinkit. I had no idea that Hyperpure is so expensive to, important to Zomato. And of course, you might be like, maybe your data is wrong and how do I trust this and stuff. You can just click this source button here. And when you click on source, we take you to the exact page and, highlight the line item from where we got this data. So you can see here revenue, food deliveries 2000 out of 4799 crores, and Hyperpure's 1473 crores out of 4000, approximately 4800 crores. So I mean, it's quite natural to be like, okay, I don't believe this data, how do I know? You can just click on source and we'll take you to the exact line item and exact source from where we got this information from.
This data, Varun, is based on quarterly numbers.
So it's a bit like nuanced. We have a hierarchy of sources that we trust. So the first thing that we trust is company filed information to the exchanges. After that, we trust like accredited sector bodies, like say for banking, I'll trust RBI, and for automobile, I'll trust CM. After that, we partner with some broker, we might look at their information. So based on this hierarchy, we first look for information here. Since we've got it from our priority one, which is the exchange filing, we put it here. But to answer your question, it depends. like I'm sure we'll come to examples later where the information might be in other places other than the company filings. Okay. So is that clear?
Yes, Varun, I can proceed to the next feature.
Yeah. So, I mean, this is the revenue mix. It gives you a detailed breakup of the business of the company. You can check it as on a historical basis. I mean, you can see that Hyperpure was 5% some time back and is 30% now. Blinkit was, I mean, nothing, 8% just 2 years back and is 24% now. Uh, and you can just, and it gets 3% of revenue from UAE. I didn't know that. So you can just get a detailed pie chart or cross sectional view on what the business of the company looks like and how it's doing, how it's trending. Another thing that you'll care of if you were to invest in Zomato's, like, okay, how many food orders is Zomato doing a month? How many orders is Blinkit doing a month? How much does it cost? I mean, what is the average order value? Stuff like that. So we have all that under this section called operational metrics, again on the company page. You can just go and just check, okay, monthly, I don't know, I want to check how many quarterly orders in quick commerce are there in Zomato, and I'll want to compare that to Swiggy. And you can just do that in a click of a button. So Zomato is getting 70 to 90 million orders. Swiggy's at 55 to 60 million. Uh, Number of dark stores of Zomato versus Swiggy, even that we can see. Zomato's at 600 and Swiggy's at 500. So basically stuff like that. You can get a good insight into the operational metrics or the key drivers of the company, which again ties back to what I was saying. We are focusing here on unstructured data rather than structured data. This is not data you get in ready rows and columns. If I click source here again, I'm sure I'm going to go to an investor presentation. Yeah. So it's going to be one investor presentation, a line item there, stuff. So it's not that easy to index and to get in one place and then to make it comparable to Swiggy. It's going to take you 20 minutes of your time. We just have, written software to put it all in one place. Okay. Any questions?
So just one thing, I think I'm very sure the operational metrics for for different companies and different industries are different. So while we are seeing for Zomato and Swiggy, we are seeing the average order value, monthly order value, and all these things.
Yeah.
The moment I
Yeah.
shifted to a manufacturing company, it will be
Yeah.
different,
Yeah. So
right?
let me show you an example. I'm trying to get this. Uh, just one sec. Let me just show you an example. Okay. Let me try Narayana. Let me try an hospital, or if you know any other company, give me that. Can you see? I've added a
Yes,
hospital here. So now if I
yes,
go to the operation, or let me go to the revenue mix of this company. So here we are talking about what is the therapy-wise breakup, like how much it gets from cardiac science, how much it gets from oncology, how much it gets from gastro, stuff like that. Okay. And if I go to the operational metrics of Narayana, then what I get is, uh, how many beds it has, what is the occupancy rate of the hospital. If I want to
correct,
compare beds of Narayana to, say, Fortis, or I want to compare it to, can you tell me some other hospital, maybe Apollo?
right,
You can just do it all in one page. So the metrics for Narayana are completely different to compare to, say, Zomato or anything like that.
correct. Makes sense.
Okay. And then,
Right,
of course, we have the standard, you can have pairs and stuff. One more thing that we do is, okay, here it might not be too relevant, is we capture the suppliers and customers of a company. So I can go to an auto ancillary company next, for example. There you get many, how would you say it? You get, like, if I'm a small auto ancillary, I want to know who are the customers of mine. It might help me, get some conviction on the company. So we track those as well, suppliers, customers, and stuff like that. That again comes under unstructured data. One more thing that people might find useful is, like, okay, when you're doing research on a company, you would want, I mean, okay, you can read the financial statements and go through our information that we've indexed here. You'll also want to see how other people have researched this company. So, for example, if I just click on, so we have a section called knowledge base over here. And if I just go to the discussion and analysis section, I can uh, I can just click on any of these links and it'll take me to, like, for example, the Narayana model. It's an article by Wharton.
Okay.
So you can read what Wharton said in 2010 about Narayana and what is their business model exactly. Or, I mean, you can see a YouTube video might have been linked about Narayana, a 50-minute video of Narayana compared to its competitors and stuff. So it kind of gives you an overview of the company as through the lens of other people and what research they have done on it. And these are all, you can just click it and these are open and free links. There's no paywall behind it or anything. Okay. Uh, so imagine you're doing research about this company. Of course, you'll care about the P&L. You'll want the unstructured information, like how many hospital does it have, how many beds does it have, therapy wise, where does it make, where does it make money? You'll also want to go one level up, which is okay. Narayana is in the hospital sector. So how's the hospital sector in India doing? How should
Correct.
I look at hospitals? How should I value hospitals and stuff like that? So we even index sector level information of these companies. So what that means is like, since Narayana is obviously in the hospital sector, you can go and read about what companies or what people have said about the hospital sector and how you should, study it. So, for example, someone has written a thread on medical tourism in India. Someone has written a thread about accounting in hospitals. Someone has written a thread on business model of Indian hospitals simplified. So when you click on it, you can see an exact, like a very high quality thread of how you should look at the hospital sector in India.
Correct.
So, it helps you. Basically, what we're trying to do is help people get a deeper and deeper understanding, easily through our platform, link all the relevant information, and then, of course, you'll have to do the work. So, what this is doing is kind of giving you also a sectoral overview of the company.
Correct.
And of course, again, this will also be different for different. So if I go to, let me just go to HDFC Bank. Or do you have any company in mind?
So for customers and suppliers, I had PM Industries in mind. That can
Sorry,
help us.
how would
PM,
I spell it?
FIEM.
Is
Yes,
correct?
yes, yes. Yeah,
Yeah. So if I hope we have it, but if
right.
I go to Feme Industries, then, and if I go to customers, then these are the
Yeah,
customers.
correct.
I would
Okay,
look at,
okay.
I guess it's more two-wheeler focused, is what I'm
Yes, yes,
understanding.
yes, yes, yes. It is.
And then also, yeah, so here you also get that. So if you could look at customer segments, which is now this is tuned to automobiles, it gets 96% from two-wheelers.
Correct. Makes sense. So it has a list of all the customers that PM eventually sells its
What
ancillary
FEMA
products
has
to.
listed, of course, it might have
Right,
other customers, and many companies don't like to disclose it sometimes. But of what FEMA is listed, these are the ones.
all right, makes sense.
And then, of course, again, you have the analysis section for this company, then, and then you have for the automobile sector.
Right, correct.
Okay. And like I was saying, we have the standard financials and shareholding and stuff. One thing that helps in the financials is, like if I go to the P&L, for example, of FEME Industries, what you can do is usually you like to see it in comparison to its peers. So can you give me a good peer of FEME Industries in case you know top of your head?
We can maybe try Minda Industries. That's ancillary for four wheelers.
Minda
Yeah,
Corporation or Uno
yeah,
Minda?
yeah. No, corporation.
Yeah, so I can just add Minda Corporation and you can see their P&L side by side there.
Okay,
Okay. And what you can also do is we have these buttons on top. So right now it's in the amount or rupees mode. You can also, I like doing this. I just click on year on year. So you can see the year on year growth of all these fields for FEME compared to Minda.
right,
So what that means is we can see that sales of FEME, for example, growing at 10%, but Minda is growing at 5%.
right,
Or I don't know, let's see, net profit is growing the same though.
correct,
So it just kind of gives you a good comparison, especially for like, the
right,
Swiggy, Zomato type companies that, okay,
correct.
what is the scale that they're operating at?
I think Swiggy and Zomato are more like comparison than PM and Minda because one is into two wheelers and the other is into four wheelers.
Okay, right.
Yeah,
Yeah. So I like to show you one more thing. I mean, I'm just skipping past all these because these things are there, on most platforms, like what are the ratios and stuff like that. That is there everywhere. I want to show you this reverse DCF. I'm sure many people have heard of a DCF calculator. What we've put here is a reverse DCF calculator. So what it needs as an input is the current best measure of earnings that you have. Like some people put net profit. I usually put cash flow from operations. Some people put free cash flow. You add that here. And this discount rate is the hurdle rate that you want from your investment. So say I want to make, if I'm doing direct equity investments, I want at least 18% return to be made for it to be worth my while. Basically, 18% is my hurdle rate.
Right.
And I put the current profit. I auto populate the profit, but you can put any measure you like. Current net profit is 186 on a TTM basis, and current PE of the company is 21.
Correct.
So I'll just tell you. I'll go back here. Yeah. So I put the current net profit as 186. My hurdle rate is 18%. Current P is 21. I do a best guess. Now, these are all like estimates, best guess, probability based things. These aren't
Correct.
any fixed numbers. I say in 5 years, I find it reasonable that film industries will have a PE of 20% of 20 even 5 years from now. Not
Okay.
20%, but 25 years from now.
All right.
So then what this reverse DCF calculator tells me is that based on its current earnings base of 186 crores, and if it has a PE of 25 years from now, if I want to make 18% return on my investment, say I bought the stock today, then what FEAM needs to do is increase its profit by 15% CAGR for the next 5 years.
Okay.
Okay, so now if I want to invest in FEAM, all I need to do now is and think, okay, based on all the research I did in the first page, like the business mix, I looked at the metrics, I read blogs, what other people are saying, stuff like that. Based on all the research I did, do I think this company can grow its earnings at 15% CAGR for the next 5 years? If and do I think that its PE will be at 25 years from now? If yes, then I will make 18% return on my investment.
Correct.
Okay. So now people ask, how do I know what the P is 5 years from now and stuff like that? I mean, there is no rule for that. Can just tell you what many people usually do. They go here. This is the price chart of the company. Instead of price, I put valuation. I take 5 years. The median 5 year P is 17.6. So
Correct.
to be safe, so when you put 20, you're assuming it's going to be more than the median. So to be safe, I would put it was 17.6 there. I would put the P as 17 just to be safe. Okay. And if I want 18% return for from my investment, just to be safe, I would put 20 so that there's some margin of safe, or 19 or something like that. So there's some margin of safety in my calculation. And then what this is telling you is, okay, then for you to reach your goal, film industry needs to grow its profit at 18% CAGR for the next 5 years.
Correct. Makes
Okay.
sense.
If you think it can do that, then maybe you can really think about going ahead with the investment. If not, there's no point going ahead with this. So definitely where this helps is stuff like, people look at things like Asian Paints and such a good company and stuff. How this helps me there is, if I go to reverse DCF there, same, its earnings is there. Our previous discount rate is again here. It's saved for you. You had put 19, that's 19 here.
Correct.
If I say that in 5 years from now, the PE will even be 35, which is quite high, then Asian Paints will need to grow its earnings at 25%
Right.
CAGR for the next 5 years. Immediately, in 1 second, you'll know that this is not going to happen, and there's no point even breaking ahead and studying this company. Okay, because if I can even go to grow, I'll see in the previous 5 years, it's grown its earnings by 7%. Last 10 years, it was 12%. So 25 is a huge jump. So
Correct.
this kind of saves time because you're like, this company might not even be worth studying.
Correct.
Like it saves you time in that sense.
Makes sense. And
Any
what about the
questions?
What about the other two features, 10-year terminal multiple and 20-year terminal multiple?
Yeah, so I mean, basically, you can put the what you think the P will be 10 years from now, which should be less. I mean, you can be more conservative. So this will tell you, okay, this is telling you that if you want to make 19% CAGR over the next 5 years, it needs to grow its earning at 25%. If you want to make 19% CAGR over the next 20 years, then this company needs to grow its earnings at 20% over the next 20 years. I mean, you must have seen a lot of videos where people are like, this company will grow forever. But if it has to grow at this rate for the next 20 years, it'll be I mean, humongous company, which you can easily see is not going to happen. So
Correct.
if your holding period is 20 years, you can easily write off this company and say you will not invest.
Correct. Given the multiple remains 25 by the end of 20
Yeah.
years.
Of course, if you think, okay, no, the multiple will always be high, it'll be 45, then it needs to grow its earnings only at 17.5%.
Right. Right.
What you can also do is, this is kind of hacky, but you can be like, I think the earnings will grow at, say, you think that the earnings will grow at 12% for the next 20 years.
Right. So what
Then
should be the
what you can
multiple?
do is, yeah, you can do is, okay, then for you to make money on your investment, you will know that the P of this company needs to be, I mean, some crazy, it'll be a crazy P. It'll be like 20 years from now, Asian Paints P has to be 120
Hmm. Makes
for
sense.
you to make 19% on your investment if you think the earnings will grow just by 12%.
Correct.
So, I mean, it depends on which way you want to go get into it, but yeah.
Makes sense. I think, yeah, this makes sense. We can move on to the next feature because reverse DCF was something that a lot of people wanted to
Yeah.
explore on Tijori, but by the face of it, they did not really understand. So this
Yeah.
part should help.
Yeah, so we've
Yes.
linked this video also.
Okay.
So you guys can click on it where Siddharth and me have explained in detail how to use it. So, and of course now this recording is there. Uh, yeah, you guys can check it out, and I find it very useful.
Perfect. Then we can move on to the next feature.
Sure. So right now, what we were doing is we were looking at research at a company level. I told you we have sector level information over here, where Asian Paints is in the paint sector and stuff like that. So you can see videos about the sector. We also have sector screens where let me just go to HDFC Bank, for example. So imagine you've done research on HDFC Bank, then you have gone and studied also about the sector, you've gone to the banking sector, looked at all these videos. You'll also want data on the sector that this company is in, which is banking. We also have sector screens apart from company screens. Okay. So what this sector screen does is it kind of gives you an overview of how the sector is performing. So it has these custom indices for this sector. Like usually you would have seen private bank, public bank index. We also have like a overall bank index or other financial services like life insurance index, general insurance index, stuff like that. We give you in one place market share at an index at a sector level. Sorry. So in advances, every bank is here. So can you tell me some bank?
Axis Bank, you can add.
Okay, Axis Bank. So in loans, SBI has 22%, Axis Bank has just 5%, and 5 or 7 years back it was at 4.93, and now it's at 5.78. So it has gained market share, but not that much, is
Okay.
what we can see.
And this is
SBI
one,
has lost market share.
right. And this is one of the operating metrics.
Sorry?
This is one of the operating metrics. We can change the
Correct.
operating
So
metric
this
and
is
see.
again
Right.
correct. So now we can, if you want, you can see, okay, these are just the loans, but finally banks need to make interest. So of 100 rupees of interest made by banks throughout
Hmm.
India, Axis Bank had 5 rupees of loans for every 100 rupee loan. In
Hmm.
interest, it has 6 rupees.
Okay.
So, I
Right.
mean, these are all the metrics. You can see credit card market share. A lot of people look at HDFC Bank and stuff like that. Its market share has been going up recently from
Right.
25 to 26. Peak was 33. So, kind of gives you a sense of how things are trending. You can, again, if you want to look at Axis Bank, you can add that also. Okay, in credit cards, it has decent 10% market share, and it was 9% some
Nice.
time back.
Right.
So, and or even 8.9. I think they bought some entity, but yeah, so it basically just gives you an overall sense of how the sector is doing.
Correct.
And if you want to see how bank loans are going up in the sector, how credit card usage is going up in the sector, how UPI usage has, skyrocketed in the sector, everything is there in one place in the sector screen. Yeah, so one thing I wanted to show you all is now if I go to a company like this, uh, I mean, we just add a lot of, and like we said, we focus on unstructured data. So say you've read about the company and you're tracking it. I just want to show you a couple more features on the company page. Now, if I go to this Loris Labs, you can click on this Explore Timeline. It just
Correct.
gives, it's basically an event feed of the company. If you click on it, it tells you price changes and stuff like that. We also aggregate data from social media and stuff. So if
Okay.
there was any news sometime back or anything happened, it's all in one place. You can just go and browse through and be like, okay, what all happened in this company last 1 2 months or 2 3 months. I forgot the history that we store. And second thing that I want to show is, I don't know how many of you all read con calls, but this conference call is like a whatever 18-page document and is very, verbose and stuff. You should read it before the final investment decision. But what we help here is we make a con call summary for you. So yeah, you can just click on con call summary, and it's a very concise summary about this particular con call, and it has different headings. You can see what management said about growth, what management said about its financial performance, what insights it gave on business operations and stuff.
Right.
And of course, I mean, you'll need to be a bit careful because the data, it's powered by an LLMs. So
Correct.
uh, some error will definitely seep in. But just to get an overall sense of what the management is saying, you will get it here.
Makes sense.
So, I mean, this was about company and sector research. There are many features. I don't want to talk about everything because it might be overload and stuff. Yeah. So before that, what I just wanted to, bring some structure to this. So right now we're talking about company research. So if you think about your investing process, there are 5,000 companies on the exchange or close to that, right?
Right.
From the 5,000, you need to filter down to the 5, 10, or 15 that you actually want to research, because you can't, I mean, no one really has the time to read all and track all and or buy all companies, right?
Right.
So you need to filter from 5,000 to 10, 15, 5, 20, how much of bandwidth you have. After you filter the 5, 10, we will then do what I showed you just now, which is research at a company level, sector level, everything. And after we have done that research, we'll want to buy one out of the 20 companies or one out of the 30 companies and then track them. Correct.
Correct.
So before we go to timeline, which is more of a tracking, that is post me adding it to my portfolio or watch list, I want to I just thought I'll show you how you can even discover companies to to research on Tijori.
Correct.
Is that fine?
Yeah. Yeah. Books.
So, like I said, we first need to help you find companies to invest, to research
Right.
in, and which you will then invest in. So, one of our most used features is this market monitor. So,
Okay.
what this feature does is, like, everyone has gone to a page where you can go and check the how Nifty is moving today, Nifty, mid cap, small cap, micro cap, all in one page and stuff. What we have done is we have created these custom indices. So for example, we've created a railway index or a battery index. So what people do is they go and look at, okay, last 3 months, let me see the best performing index is the solar panel
Correct.
index, or the worst performing index, for example, is telecom index or paint index or city gas index
Right.
on a 3 month basis. So then the next question becomes, okay, which are the companies in this index? When you click plus, you can see the exact companies in this index. Okay. And then you'll see, okay, Adani's gone down by 3%, Indraprastha has gone down by 42% in the last 3 months.
What
So
are
this
these
becomes a
numbers,
sort of,
Varun?
sorry?
What are these numbers? 7.24%,
So this is the
16.32%.
weight of the company in the index.
Okay,
So
all
this is the market, this is the capital weighted. We also have equal weighted if you want.
right. Okay, all right. Makes sense.
Okay.
Thank you so much. Yes, we can
Yeah.
continue.
So then, I mean, I'm not suggesting that you actually look at this company, but this is just a general process that people look at sectors that are not doing well, then companies in that sector, and then you might be like, okay, what is this Indraprastha gas? What is Mahanagar gas? What does this company do? Why is it gone down by 42% in the last 3 months? Then they go to the company page and start studying it. Usually what they do is they first go to this timeline and be like, was there any news which is telling me why? And the first thing you see here is that news.
Right. Makes sense.
Okay. And it gives you more city gas. So now it's not just telling you about that company, but that whole, see, if you remember, we said this whole sector is doing badly.
Right.
And here's some context why.
Right.
20% cut in domestic gas allocation. So basically, they must be getting the the rate at which they must be getting the gas must have gone up or something like that. So it kind of gives you that that if there was any big mover, it'll definitely show up here on this timeline. Okay, and then you can see, okay, government sources want to normalize their profits and stuff like that. So that's why that nosedive. And then you might be like, okay, that is a good reason for it to go down. So I'm not interested in the sector. Let's see the next sector. Let's see why. Okay, packaged meat has gone down 16%. In that, you might be like, okay, I've heard of, I don't know, Avanti
They
Feeds. It's
feeds.
gone down
Yes.
13%. And then you will go and look at Avanti Feeds. And then again, the same. Has anything bad happened? Not
Right.
sure, doesn't look like. Then you will go read about what does this company actually do, look at its operational metrics, uh, how much, okay, maybe it's selling less, volumes are going down, read about the company here, read about the sector here in case you haven't heard about it, and that's the usual flow that happens. So this is a highly used page. You can also come and check it every day just to see what's happening. So today the city has uh, sectors gone up, I guess, because of Adani, and you can check what's doing badly. IT large cap is doing badly. It's just a gauge of what's happening in the
Right.
markets today. Yeah, go ahead. No, yeah. So I was just saying this is just some way of people knowing that, okay, what's happening in the market, what's happening today, what's happened last 3 months, which sectors are doing badly. Because if I tell you mid cap sectors doing badly, it doesn't really solve your problem, right? Like you're still like, okay, but which company do I look like? How do I discover a company within that? So this is just another way for you to discover a company.
And people who want to basically read momentum-based stocks, they can simply see what companies are doing good in the past 1 week, 1 month, 3 months time frame. And if somebody wants to look at companies that have been, some companies that have gone down in the past 2, 3 months, they can look at that. That makes sense.
Correct. So you can see last 3 months solar panels rating EMS is doing well, but one thing that might have surprised you is, okay, rating agencies are also doing well. Why are they doing well? Why has care
Mm,
gone up 54%? And
right,
it's just something to investigate,
correct.
because we hear of many things, but there are many, like, diagnostic chains are suddenly looking up. So we just hear of many things. There can be something hidden, something which you might not have seen, and you can see it here.
Makes sense.
Okay. So another well-known way to get to discover companies, which we have on feature here, is screening or filtering or whatever you want to call it. So of course, again, now here as well, we want to focus on unstructured data rather than structured data. So what does that mean? Is I would recommend everyone come in and first run some popular screens.
Okay,
And what I mean by unstructured data is like many platforms have this thing where you can screen on financials. So I look at, I know, cash flow machines, for example. There are 900 companies found, and it has some complicated financial filtering criteria of it should always be generating cash and stuff like that.
right,
Okay. But where we kind of differentiate is, or if I look at small cap consistent compounders, I can just show you. So this is giving us 34 results, which is quite a few companies for us to get into if we really want to, right? that, okay, these are small cap consistent compounders, all have good ROCs and good sales growth, good return ratios, low debt. But 34 is still a high number for me to research
Correct.
on. So how do I break it down further? So there are some ways. One way is we have this tick box here called hash superstar investor.
Okay.
So I'll just tell you what it means. So just click this and run this query again. So we had 34 companies there. Now it's down just to 4.
Okay.
So what this is telling us, of those 34, there are 4 small cap consistent compounders in which 2 of which Ashish Kacholia has invested in, one in which Sunil Sanghani and one Mukul Agarwal has invested in this Tejo Engineering,
Correct.
right? So this, so from here you can be like, okay, and this is in this is in pharma sector, this is in the consumer sector. Maybe I should look at this, and then you'll get into it.
Yeah. Can we also know when exactly did they invest?
So yeah, you will, because if you go to Tejo, it's a little roundabout right now, but you can. So you go to the
Okay.
shareholding pattern.
Okay.
So their name should be here. They invested in September 22 first.
Okay. All right. Correct. And they've sold off 0.01% till
Correct.
now.
And last quarter they had sold a bit, so you need to think about that as well.
Correct.
But it's just giving you a sense that, okay, so, for example, small cap companies are tend to be risky, don't know accounting, who's the promoter, are they going to cheat you, whatever. These big guys have invested, so they must have done some diligence before buying 2% in the whole company. Again, it's not a reason to just jump in, but you can just whatever, have a starting point at least to research.
Correct. Makes sense. Right.
Another way you can research is, like I said, we focus on unstructured data. Like, you can look for companies, for example, which are global leaders. So what that
Okay.
means is, like, on many platforms you can type, market cap greater than 100 and ROE greater than this and ROC greater than that, and you'll
Hmm.
get companies. But what we let you type is, for example, tell me companies with global market share more than 10%.
Okay.
Okay. And these are like 16 companies. So this information is very hard to actually get. And
Correct.
then again, you can boil this down also and run this. And then
Yeah.
you're down to just 2 companies.
Correct. Makes sense.
Okay. So what I recommend for this screening is, first people run some popular screens to get a hang of things, and then don't go to the advanced screener, just go to the stock screener. Because what this does is, it gives you the ability to screen in a drop down fashion. So say I want small and mid caps
Okay. All right.
uh, with high exports
Hmm.
and I don't know, high ROC, for example.
Correct.
And if I want also high promoter holding, I've applied all these filters. I just click apply. I hope my criteria is not too tight, but I just click apply and now it gives me 51 companies. And you can see the filters you applied here: high exports,
Right.
small and mid cap, high ROC, and high promoter holding.
Right. And
And maybe you'll also want to see if the promoter is buying, because there are 51 and you want to reduce the number of companies. So then there are just
right.
5.
Right. Right. Makes sense.
Okay. So, I mean, these are just ideas on how you should, like I was saying, there is the discovery of companies. After discovery, you do research. After research, you buy it, and then you do tracking. So we
Right.
first spoke about research. Now these are how you find companies to actually
Company
even research on. One was the market monitor.
monitor.
Second is this filter. I just want to show you a work in progress feature. I mean, this is not release, which is this. We're putting it all together in one place. It's called this ideas dashboard. Okay. So basically, this is a page just of widgets. It'll just tell you, in all these companies, promoters have been buying. In all
Right.
these companies, rating agencies have upgraded them. These
Right.
companies are trending on social media. All
Okay.
these companies are doing QIP, CAPEX, stuff like that. So you just get ideas that, okay, all these companies are trending. Maybe you'll want to look at one or two of them. But this is a work in progress feature. Maybe in the next few weeks it'll be out.
Okay. All right. Makes sense.
So any questions till now? We've spoken about discovery and research. Otherwise, next I'll just go to tracking.
Not really. I think we are good to go. Later on, you
Yeah.
can simply help us with tracking watch list, portfolio, all those features combined, and maybe also the raw
Yeah.
material feature that we have on our platform. That is also something that I find it to be useful.
Sure. So I'll just show the raw material feature now. This is very simple. It's a list of chemical and metal raw materials and the price movement over the last 1 month, 3 month, whatever. But what we have done is now say again take 3 months, ethyl dichloride price has crashed. So who will benefit are the people who buy it, and who will do badly are the people who make it. So you can in one click you can see these are the companies that make ethyl dichloride, and these
Right.
are the companies that are buying
But
ethyl dichloride. So it's good for them,
right. Makes
correct?
sense.
And again, you then the question is how much are they making of it? Then you'll have to go to the company page and figure all that out.
Correct. Makes sense. So again, this can also be
Okay.
one of the starting points to read and understand companies apart from
Correct. This
market
can
monitor
also
and
be a
see that.
starting. Yeah,
Right.
correct.
Makes
Correct,
sense.
for sure. But one caveat with this is you need to see how much is the actual exposure. For example, Reliance is here, but of Reliance's total revenue,
This will be
this is going to
minuscule.
be very low.
Right.
Yeah.
Makes sense.
So this really helps if there are micro and small caps here who are doing one, two, products, of which one of them is this.
Correct. Makes
So
sense.
that you'll have to get into once you do the research. Like
Right.
Malik and Hydrate, these guys may be making higher percentage because they're very small companies.
Makes sense.
So if I go here, it's making phthalic anhydride is 87% of this company. So then
Right.
I need to look for that chemical in case it's here. And then I look at Malik, phthalic anhydride is here. But this price has gone down only by 7% last 3 months. So we'll know that, okay, this company, this Tirumalai Chemicals, its revenue is going to get impacted for sure. Or you can be like, if the price goes up, then it's going to be really good for this company.
Right. Makes
So you
sense.
need to use little discretion while using this feature. Okay, and it's updated once a day.
Once in a day.
Yeah. So yeah, once in a day.
How's the data file?
So we've tied up with some vendors, we've tied up with sources at port authorities, and what are the import price, what is the export
Oh,
price. Then
right.
we clean up all that information and put it here in one place.
Oh, makes sense. All right.
So it's there for chemicals and it's there for metals. So metals, especially the ferroalloys and stuff, might be little more actionable, like ferrochrome or silicomanganese. Many people are making it. You can actually check that, okay, if 30% down from its all time, from its 52-week high. So these guys will get affected for sure. Okay.
Right. Makes sense.
Okay. So then we've done our filtering or discovery of the company. After that, we've researched the 20. Then we are wondering whether to buy two, three of them. So what we would do is add them to a watch list. Our watch list feature is kind of I wouldn't call it anything special. It's just like any other watch list. You add companies, it populates them in a table, and you can view them via any metrics. Where we become useful is again in the unstructured data that you add all these companies to your watch list. What we do is generate a timeline for you. And this timeline is basically like a Instagram feed or a news feed of your companies.
Right.
Okay. So, for example, Prestige is in my timeline. You can see that this company's management has given guidance. Prestige says confident of achieving 24,000 crore pre-sale. This is and will achieve 18,000 crore pre-sales in H2 of this year. So this becomes extremely valuable information in case you're invested in this company, right? Because the management is telling you what its sales will be in the second half of this year.
Got it.
If you invested in, I mean, we have all these shareholdings and exchange filings and all that also come here, which is what everyone has. But what we've tried to do is focus on unstructured data. Like if you have IOL chemicals in your watch list, then we tell you, okay, it's released latest information about its plants, and paracetamol capacity is the same.
Got it.
Same for ITD cementation. It's released latest information. Its order book is going up compared to last quarter, but is down year to year.
Correct.
Stuff like that. Any rating action on your companies or anything. Okay, this I find important where Page Industries promoter has sold shares because
Oh,
you're like,
okay.
okay, why is the promoter selling shares in the company, right?
Right.
Ajanta Pharma has updated its debt information. Debt is it's still
It,
negative, but it's going up
right,
technically.
right.
So, I mean, how people should think about this timeline is it's like a news feed or LinkedIn feed or Instagram feed where you're following companies and
Correct.
we're giving you extremely unstructured but filtered information about these companies.
The moment I add it in my time in my watch list, I'll have it in my timeline as well.
Correct. Watch list
Okay.
or portfolio.
Okay. Perfect. Makes sense.
Okay.
All right.
So,
And
this is how you track your companies on your timeline. Of course, you can customize the experience. We have a lot of filters here. Say I don't want these tweets, it'll just go. Or if I want it, you can get it back. Stuff like that. You can customize it at a quite a granular level.
and does the timeline feature also collates all my portfolios with different brokers or
Yeah, yeah. So you can add up to 5 portfolios. All the portfolios will be here. So if you go to my companies here, you can see which portfolios are being collated and which watch list. So watch
okay.
list you can add 10, and in your portfolios you can add 5, I think.
So now one last question, Varun. I wanted to know what all features are included in the basic plan and what all features are included in the premium plan.
Yeah. So I think you can check here. You can go to our features page. For the beginner investor and stuff, honestly, the free plan is enough. Um, you can check what all is included here. But so some of the historic information or comparison information and stuff is only in the free plan. Okay. And for portfolio, for example, you can add one portfolio for free. But if you want to add more than one, say you want to add for your spouse or your parents or whoever, because many of our users track their family's portfolio with us, for that you'll have to pay.
Right. Makes sense.
Okay. It's quite comprehensive. Basically, any historic data or source-based data or comparisons. If you want to add more portfolios, more watch lists, you'll have to upgrade to the premium. Otherwise, the free plan is enough.
Okay, Varun. I think that should help the audience. Anything else that you want to mention?
No, so I mean, I just want to again summarize by ending with the 2 points I started with. One is when people think of Tijori, they should think that we are focusing on unstructured information. We are not, I mean, we have all the structured information, but where we differentiate is the unstructured stuff. We want to focus on the business data and the operational data of companies because finally, if you're doing fundamental investing, that's the main driver. The financial statements are like the post-mortem of the underlying drivers, which are the metrics and the business data of the company. And second is the way we've organized the jury based on this unstructured information is discovery, research, and tracking. In discovery, we spoke about filters, market monitor, and that work in progress feature that we're working on, ideas dashboard, raw material screen, stuff like that. In research, I showed you the company page, sector page, reverse DCF, yeah, and timeline. I mean, timeline is for tracking, and for timeline, I showed you how to get granular, how to filter, how to track, how to go to watch list and stuff. We keep adding more features, but yeah, that's what people should remember that we are focused on discovery, research, and tracking of unstructured information of companies, and that's how our features and our data is organized.
I think that should help. Thank you so much, Varun, for your time. I think the
Yeah,
audience had a lot of queries in terms of how to use the platform, what the features are available on the platform, and how can they make the best use of the platform, given they opt for the free plan or for the premium plan. So this video should help. I think we have given them a good 40, 45, 50 minute or tutorial for them to understand how
sure,
exactly
sir.
the jury looks like and how things work around. I personally use it myself, and there are a lot of features that are not available on many other platforms. So it becomes a no-brainer to use Tijori to analyze stocks based on a lot of fundamental things. Thank you so much, sir.
Thank you. Any question you all can write to me and from you or the audience, and
Yes,
we'll get back. Thank you.
thank you.